Hey everyone, happy Monday, November 17th. I'm Endrit Sella, and this is Capital Markets Quickie. Let's jump into what's driving the week ahead. Quick note before we dive in. Today's episode is brought to you by AMF Capital, Asset Management Frankfurt. Learn more about our funds and strategies at amf-capital.de. So after a record 43-day government shutdown, the longest in U.S. history, Washington is finally back to work, and markets are watching closely to see what that means for the flow of economic data. For the past several weeks, investors and policymakers have been flying partially blind, since many of the official reports were delayed due to furloughed workers. Now that the shutdown is over, we'll hopefully start to see a return to normalcy. But it's still unclear whether all government agencies will immediately resume their usual data release schedules, so a few key reports could still be pushed back. In the meantime, this week's corporate earnings calendar is stacked, and artificial intelligence will once again take center stage. Nvidia is reporting on Wednesday, and as always, when Nvidia speaks, markets listen. The AI giant has been the heartbeat of the tech rally, though lately, it's also been a source of volatility as investors debate whether valuations have gotten too high. In its last report, Nvidia barely beat expectations, but the real story was management's reassurance that AI demand remains incredibly strong. Now, aside from AI, we've got the retail giant stepping up this week too. Walmart is set to report Thursday, just after announcing that John Furner will officially take over as CEO in February, succeeding Doug McMillon. Walmart's stock hit a record high in October, which says a lot about how defensive investors are thinking right now. Target will also be in focus after its recent leadership shuffle, and Home Depot's results on Tuesday should give us a pulse check on consumer spending and the housing market. They recently raised their full-year outlook, citing stronger demand for home improvement projects, which is a little surprising given how sluggish housing activity has been overall. Lowe's reports Wednesday, and discount favorites like TJX and Ross Stores are also due this week. On the macro side, we might finally get some clarity on the housing market, assuming the data actually comes out. Existing home sales for October are scheduled for Wednesday, and the market's basically been frozen for 2 years now because of high rates and low supply. Housing starts data is also on the calendar, though again, it's uncertain whether it'll be released on time. The Fed minutes from the October meeting are also due this week, and that's going to give us some insight into the internal debates about interest rates. Some officials are leaning toward more cuts, while others are worried about inflation sticking around. And finally, we'll get the latest consumer sentiment data, which earlier this month showed that the shutdown had already started making consumers more anxious about the economy. So, between the Fed, housing, and a packed earnings slate, plus a government just getting back on its feet, it's shaping up to be a pretty eventful week. Alright, that wraps up today's Capital Markets Quickie. Join me again tomorrow morning for more market updates. See you then.